You've probably heard about it. Over the next couple of decades, we're supposedly going to see the largest transfer of wealth in human history. We're talking about a massive amount of assets moving from baby boomers down to their kids. But the big question is this really the economic rescue that younger generations have been hoping for? Or, is the reality a whole lot messier? It's wild. Machiavelli wrote that more than 500 years ago, and it just hits the nail on the head. It perfectly captures how intense this all is, both financially and emotionally. This isn't just about spreadsheets and bank accounts. It's about family, it's about security, about legacy, and as we're going to see, that's where things can get incredibly complicated. And there it is. That's the headline number that grabs everyone's attention. When you add up all the assets of the boomers and the silent generation here in the US, you land on a number somewhere around $90 trillion. It's a sum of money so ridiculously large, it's kind of hard to even wrap your head around. So that really brings us to the core question of this whole explainer. For younger generations, who are dealing with student debt, insane housing costs, wages that aren't keeping up, is this massive transfer the financial lifeline they've been waiting for? Or is that $90 trillion figure just a mirage that kind of vanishes the closer you get to it? So first, let's just lean into the promise for a minute. The big hope, the dream scenario, is that all this wealth is going to flow down, right? It'll smooth over all the financial bumps for millennials and Gen Z, and eventually it'll make them the richest generations in history. Sounds pretty good. But, and there's always a but, when you start to look a little closer at what this wealth is actually made of, you realize it's not some giant pile of cash. Nope. It's a really complex mix of stuff. Stocks, the family home, pension plans, and millions of little private businesses. And, as you're about to see, every single one of those categories comes with its own set of challenges when it's time to pass it on. And that right there brings us to the financial reality check. That $90 trillion pie, it's not really what it seems. A huge chunk of it is illiquid, meaning it's not cash, it's hard to put a price on, and a lot of it might not even exist by the time it's supposed to be inherited. Let's break down exactly why. Okay, first up, private businesses. About 10% of all that wealth is tied up in small, founder-led companies. So think about like a local doctor's office or a machine shop that's been in the family for years. The problem is, the value of that business is almost entirely tied to the founder's skills, their reputation, their relationships. Unless their kid also happens to be a doctor in that exact same field, you can't just hand over the keys. Actually, business brokers have this kind of grim term for all the risks here. They call them the killer Ds. A sudden death, a messy divorce, a disabling injury, or just plain old financial distress. Any one of those things can absolutely wipe out a business's value, sometimes overnight. The estimates are that because of this stuff, up to half of all that private business wealth might just vanish. It never gets transferred at all. And you see the same kind of issue with pensions. Boomers were really the last generation to get these widespread defined benefit plans. Now, they're fantastic for retirement, but here's the catch. Up to 40% of them are structured so that when the person dies, the payments just stop. That wealth doesn't go to the kids, it just disappears from the balance sheet. Now, here's a number that keeps a lot of retirees up at night. This is a rough estimate for the annual cost of senior living or nursing home care. And here is the absolutely critical piece of the puzzle that so many people do not realize. Medicare does not cover it. To pay for that late-in-life care, a lot of seniors will have absolutely no choice but to sell their single biggest asset, their house. We're already seeing a rise in things like reverse mortgages and cash-out refinances, as retirees are basically forced to drain the equity from their homes just to cover their bills. And every time they do that, the inheritance pie gets a little bit smaller. So, okay, after you factor in all those deductions and disappearing assets, we are left with a much smaller pot of wealth. It's still a lot, but it's smaller. But now we have to ask the next crucial question. Who actually gets what's left? Because this isn't just a wealth transfer, it's an inequality transfer. And this is where you start to see a huge disconnect. You look at surveys and you see young adults expect, on average, to inherit something like $300,000. But then you look at surveys of their parents, and only about a quarter of them even plan on leaving a big inheritance in the first place. This gap between expectation and reality, well, it's a perfect recipe for disappointment and conflict down the road. So you might be thinking, okay, but what about the stock market? All that wealth? Well, here's the reality. That wealth is unbelievably concentrated. The richest 10% of Americans own 93% of all stocks. For the vast majority of families, that huge stock market boom that's generated so much of this wealth, it just doesn't apply to them. They don't have a piece of it. And when you look at who's actually going to receive an inheritance, the concentration is just staggering. The top 1% of heirs are on track to get half of all the money being transferred. Half! Meanwhile, the bottom 60%, they're projected to get less than $5,000. So for most people, this great wealth transfer will barely even be a blip on their financial radar. Now, this transfer, even in its smaller, unequal form, is still going to have major consequences for the entire economy. This isn't just about what happens inside individual families. It's about how entire markets are going to shift and change. So let's just look at a few of the potential disruptions. For starters, as boomers pass on, you could see a flood of homes and small businesses all hitting the market around the same time. Basic supply and demand. That could push down prices. Younger investors also just have different priorities. They tend to favor things like ESG funds, ethical investing, and crypto and simple index funds, not the traditional stock picking their parents did. This is all probably going to fuel huge political fights over estate taxes and could even lead to what some are calling inheritocracies, where the money you're born with becomes way more important than the money you earn. But let's bring all of this down from the 30,000-foot view of the economy to the place where it really matters most, the family. Because ultimately, this is where the biggest and most painful problems are likely to show up. It's that classic shirt sleeve to shirt sleeves in 3 generations phenomenon. I mean, the story of the Vanderbilt family is the perfect example. They went from being the richest in the world to having basically none of that original fortune just a few generations later. And that's not some weird one-off story. The research is clear. Without a ton of planning and preparation, 70% of family fortunes are gone by the time the grandkids get. And this all leads to a very direct and maybe a slightly uncomfortable question for all of us. Whether you're in a position to give an inheritance or you expect to receive one, have you actually had a clear, open conversation about it with your family? Well, the data suggests the answer is probably no. If you're squirming a little bit, you're not alone. Despite how important this is, only about a quarter of families have ever had these explicit conversations. Why? Well, it's just awkward. It feels morbid, maybe a little greedy, so most people just avoid it entirely. And the results of all that silence is sadly predictable, and it's tragic. Court records show that the number of probate disputes, we're talking about legal battles over wills and estates, has more than doubled in recent years. Because when expectations don't line up with reality and there's no clear plan, families get torn apart fighting over what's left. So we end here. This whole great wealth transfer thing is so much more complicated than the headlines make it sound. It's smaller than we think, it's way more concentrated at the top, and it's just loaded with personal and economic risks that most people don't see coming. And it forces us to ask a really fundamental question. Are we building a future where success is based on merit and hard work? Or are we building one where your financial destiny is pretty much decided by the family you happen to be born into? It's something we should probably be talking about.